Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, we're seeing new highs on the stock markets, but you say this is not a re-inflation. What do you mean by that?
Well, let me explain. Let me try to paint that picture as clearly as I can. It's a process, and the process is I don't know how else to describe it. In 2011, we saw the raw materials prices peaked. In this on the CRB, we saw the top in 2008, obviously with, the all-time high in crude oil and so forth. And in January of 2018, equities began trying to top. And we rock along. We finally make a new high. They finally peak in October of 2018, and we go down into the 4-year cycle low. In December of 18. At the same time, we saw bonds in October 2018. Bonds had moved down into a longer-term 3 and 10-year cycle low. And so interest rates obviously were going up as bonds went down into that low. Well, the pressure that we saw on bonds going into that low, stressed the economy, because if you'll remember last December, that's when the Fed all of a sudden did their about face and all this talk came out about them being dovish and all that. So when I say process, all of that is part of the process with this the evolution of this top. And from the December 2018 low in equities, I said that we were in an inflate or die scenario. And I said that in the event that they couldn't reinflate it, then it boiled down to how well they could contain it. And since 2018, we have not seen a reinflation. And the reason I say that, it's clear. It's clear if you look at the data. We have seen continuous decay, a weakening. Collapse is a little bit of a strong word, but continual weakness in the raw materials. The CRB remains weak. Interest rates have, like I said, they hit a brick wall last October. And we've seen now 3 rate cuts with the, declining rates that forced the Fed to do that. And none of this is indicative of a reinflation. None of it. That's not a sign. These are not signs of healthy economies, nor are the job growth rates or the growth rate we're seeing in the GDP, contrary to what we're being told. So what we have seen is a massive attempt to reinflate, again, via interest rate cuts, the news, tweets, job reports, but even China. Yesterday or the day before, someone sent me a message and it was about an article where even China was talking about, well, you can tell a lie 1,000 times doesn't make it so, and it was something about the China deal that they knew nothing about. And so every means necessary is being employed to try to hold this thing, but it has not reinflated. The issues, underlying issues are still there. We still see lower interest rates. We still see weak commodity prices, but equities continue to levitate. And as long as they do, then like we talked about last year when that top was trying to take place, it's camouflage for the underlying issues, I guess you would say, or the underlying pieces of the setup that is slowly falling into place. Equities they keep a blanket on it. As long as everybody's 401k is good and market's holding, hey, no problem, right? So, yes, the efforts have contained it, but they haven't reinflated it. And so nothing has changed from that perspective. So, we're kind of, I guess you would say, and, it's just a matter of containment. I mean, that's where we are. We're levitating here. The problems have not been solved. Nothing's gone away. And in fact, yesterday, again, someone sent me something and said in a meeting, speech, whatever it was, that President Trump is still calling for lower to zero interest rates. Well, why? Why? If everything is so good, why? So, what we see, what we hear, what we it doesn't add up. So no, there has not been a reinflation. It is a continuation of the process, and equities, kind of like back in in the late 20s. Commodity prices peaked, and I'm saying this from memory, but I believe it was in 1920, and then they worked lower, and then as those deflationary forces took hold, the equity bubble blew up into the 29 top, and then it finally broke. And it's kind of the thing we're seeing here, I think, is that we saw the equity, like I said, commodity prices peaked in depending on what measure, 2008, 2011 time frame, and then we've seen this massive equity bubble in the backdrop of a deflationary forces that are trying to take hold. So that's where we're at, and the fact that equities have held, like I said, it hasn't fixed anything. It's just part of the process that's drug on and on and on. And I will add that when you look at some of the data that I show in this last letter, this has actually been the weakest recovery. And when I say recovery, I'm talking about since the 2009 low. This has been the weakest recovery since the Great Depression, and that's documentable. I mean, there's evidence to prove that, but we don't hear that.
We'll have more with Tim Cyclesman Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's the real state of the U.S. economy right now? We keep hearing it's record low unemployment. Everybody's got a job who wants one.
Well, there's a number of ways to look at that. Number one, if you look at the GDP growth rate, it's again, that's just one measure, but it's weak. It's that we've seen the weakest growth rate coming out of a recession since the Great Depression. And in fact, let me pull up a chart here. Looking at the growth rate, it's back to levels, 2015 levels. So it's we're not seeing a real expansion, which goes back to the same thing. I mean, that confirms what I'm saying. We're not seeing a reinflation. It's just a stale levitation. And, if things were, go back to what I was saying earlier. If things were okay, then why did we need all this non-QE QE that we saw and the continuous, increase in the amount of overnight repos and the extensions and extensions and extensions? And why are we hearing that we need still lower rates and even 0% rates? And it's just, it's not what we're being told. And when you look under the hood, if you look at something besides the equity prices, you see that it's apparent. So the true state is that the answer to your question is it's very stagnant and it's beginning to contract again. And all these efforts that we've seen is to try to keep things together. It's that simple. All these things we're being told, all the efforts that we're seeing, it's to try to keep things together as long as possible. It's real simple.
The U.S. elections a year away. Do we see a lot of government manipulation to try to keep numbers good going into an election?
I think we see manipulation regardless of an election anymore. I mean, every time the market tried to correct even the smallest amount going into, there were some short-term cycle lows due in October, and that was fought tooth and nail. So I think when I say manipulation, I mean, that's not some kooky conspiracy talk. I mean, it happens with the tweets. It happens with the various news reports. It happens with news of a China deal. It happens with, the non-QE QE. I mean, they throw in the kitchen sink at trying to hold this. And I'll add to this. I think that they also understand that it is much, 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 much easier to try to hold it than to try to stop it once it, if it gets out of hand. So I think that's maybe the fear of letting the market correct, because once it starts to correct, then maybe you can't catch it, if that makes sense. So, yeah, I mean, I think there's constant interference with the market. That's what got us here.
Will these measures, like $60 billion worth of non-quantitative easing actually prevent what a lot of people are predicting will not just be a major correction, but a collapse?
It's inevitable. The thing is, let's talk about that a minute. I and numerous other historians, technicians that look at the market from a historical basis and based on normal statistics and that's so on and so forth, we've seen this thing coming we've talked about it since you and I have been talking, and they have done a magnificent job. Hats off. Magnificent job at controlling it and extending it. And it's made, I mean, it's been, it's distorted every norm in the book. For example, we talked about some of the valuation methods. We've talked about, even simple, like some of the simple technical readings measuring overbought, oversold conditions. I mean, we had the most overbought market going back to 1800 at the January high last year. So what we have seen is extremes from every measure, and there's a reason for that. It's because of all of this extreme measures that we've seen. So it computes. It makes sense. But the answer is no. It's only making matters worse. Just like, there was a intervention, but on a much smaller scale going into the 2007 top. And I said, as that cycle extended, I said, all this is doing is making matters worse. You extend the top. It's not nice to fool with Mother Nature. It's going to snap back, and it's going to make matters worse ultimately. And it did. And we had the worst financial crisis since the Great Depression. Well, this has been that on steroids. So who knows? But the answer is, the common sense answer to that question is no, it's not going to work. Ultimately, it's not. I mean, can it continue another month, another 6 months, another 2 years? Flip a coin. We will see it in the technical setup. Once it happens, we will see the setup. Dow theory will tell us, the cycle structure will tell us. We'll see when go, oops, Well, they didn't blow this one out, so we'll have some indications from the work, but when does that happen? I don't know. But the answer, I digress a little bit, the answer to the question is no, because no manipulation in history ever has worked long term. No, it's not going to work. Nope. And I think that is why it's being blown up, because you put it off as long as you can, and with the hopes that the economy would catch up with it, but that hasn't happened. That's why I'm saying there's no reinflation. If you look, some of the material that I'm showing in this letter absolutely proves this is the weakest recovery since the Great Depression, and now that's waning.
We'll have more with Tim Cyclesman Wood right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. Speaking with Tim Wood. Tim, what kind of things do you see happening, for example, with commodities in this kind of market?
Well, I think that, lower. I mean, that's what the raw materials data is telling us, lower. And, I think that includes gold. I talked about, everybody got so excited about this pop we saw this last year in gold. And admittedly, I didn't, we had some cycle lows, but I didn't expect it to pop that high, but it didn't change anything. It wasn't sustainable. I said I still think it was a counter trend bounce into the 9-year top. And now, gold is set up, as of right now. I mean, the intermediate term sell signals and everything's set up. It should go lower. So I think gold, commodities, crude oil's been hanging in there. We've been at that levitation point with some of these commodities, such as crude oil and really gold too. But no, the pressure is to the downside. Is
crude on the way down?
It's been trying, like equities, and there's been, the propensity is to go down. Yes, it's trying, but it's just, it hasn't quite cracked yet. But yes, I think crude, and equities, and commodities in general should ultimately give way. It will ultimately give way. But we got to get through this particular, we're at a cyclical juncture now where things are trying to set up. If it bites, then it bites. If it doesn't, then hey, it lasts a little longer. But I think they ultimately go down. Yes.
Tim, what kind of an attitude should an investor have right now?
Well, what I fear is going to happen, I will make a solid prediction on this. I think what's going to happen is that, it's kind of like, I don't know, think of I hate analogies because they're so corny, but, kind of like pulling and stretching the rubber band and stretching, and finally it snaps. And so the point with that is that I think everything's going to seemingly be okay, and then just all of a sudden, we're going to get a little correction that maybe they can't quite control, get a handle on, and then quicker than people realize, they're not going to realize what happened. And we're going to see it with the structure. We're going to see it with Dow theory. We're going to see it with the cycles. They're going to tell us that things have changed. That okay, it broke. So we're going to understand by understanding, what I do or we do. Technically, we'll be able to see that the break has occurred, but they're not going to be able to fix it. And that's when control is lost, and then people aren't going to realize. They're going to think, oh, well, this is just like December, or oh, this is just like 2015, or oh, this is just like the decline we saw in August. And they have been so trained that everything's okay, but it's not going to be okay. And that's what makes this all so risky, is that when the setup really comes, nobody's going to believe it. They're not going to understand it. They're certainly not going to listen to anybody who's trying to tell them about it. And they're going to get their butts handed to them when it comes apart. And that's what makes this so risky.
Tim, I was curious, when do you get more inquiries about your newsletter? When things are going really well, like they supposedly are right now, or when things are going disastrously bad?
Disastrously bad. Nobody needs any advice. Nobody listens when things are good. And when you try to tell people that things are, not going to be so good when things are good, most people can't see past their noses. And so they ignore you. Then, nobody listens. They think you're the fool. I will never forget. I was getting on an elevator, and I think I told this story one time before, but I was getting on an elevator in New Orleans at the New Orleans Investor Conference. I think it was in 2004, sometime in there. It was after the decline into 2002 low. And I had written an article in Stocks Commodities magazine. And back then, the markets we didn't have the extreme measures that we have now. You'd see a setup fall in place and the market would pretty much, do what it was supposed to do without the extreme amount of intervention and monkeying with it that we see now. But anyway, so I had written an article saying that we were going to go below, based on statistics, that we were going to go below the 1998 low, and that we would do it in 2002. Well, we look back on that. I mean, that was like a 40% decline, 38, 39%, whatever it was. And we look back on that, and it's nothing now, but it was still 38, 39% decline. I mean, that's where this whole thing really started with, well, that's another story. I digress. But anyway, so I'm getting on an elevator, and a lady looks at me, and she says, "I know you." She said, "I wish I had had your material, seen your stuff but back when you wrote the article." And she's telling me, it's like 18 months before the top, before the low, I think the article came out, or I can't remember anyway. And she said, "I wish I'd have had your material." And I was just thinking to myself, lady, you wouldn't have listened. You wouldn't have listened. People don't listen. When they need the advice the most is when they don't listen. And when they need it the least, that's when it's too late, that's when they tend to turn to help. So it's just human nature. It's a cycle in and of itself.
Tim, how can people sign up for your newsletter?
Cyclesman.com, and I have some good information that's not over the top technical in this letter that it shows what we are facing, where we're at. And, hard facts. Sometimes, people will say, well, what's the old saying about statistics where, I can't remember, but, using statistics to make the point you want to make is what I'm trying to say, to twist the numbers. No, I'm taking raw data and showing the raw data and the true state of, some measures of the economy and where we're at, and it is what it is. I'm not making it up. And, it's pretty profound stuff. And then I tie that to some previous letters looking at all this raw material data, the statistics. It's all there. So anyone interested, it's available in the, subscription.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. We're also on Facebook. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.